Welcome everyone, my name is Dan Johnson, I'm from Innovation Credit Union, and I want to spend some time with you talking about a very exciting initiative here at Innovation. So this set of slides I want to share with you tonight talks about this initiative. We want to take our organization from being provincially regulated to federally regulated. And I'll go through some reasons why we want to do that, and I also want to talk about the potential impacts to you guys as member owners of this credit union. And I really want to thank you in advance for coming out and talking about the future of your organization. Because you're an owner of this organization, I think it's very important that you're informed around this exciting initiative. Before I get started though, I want to make sure that people understand that this decision may not necessarily be for you and I today. It's a decision to position your credit union for the future, for future generations, for your kids and your kids' kids. The other thing I want to share with you is we're not doing this so that we can neglect all of those who've made us successful. We want to thank you for the reason we're successful, and it's because of you guys. And what we want to do is take our organization so that we have greater flexibility. We want to stay headquartered right here. We want to retrench and make sure that we're honoring and respecting all of those who've made us successful. But we want the flexibility to grow beyond our provincial walls in our current region. And that's something I just want to share with you. We're not looking to grow wildly across Canada. In fact, our expansion will primarily be digital. We don't want to see a growth pattern like this. We want to continue a nice, solid, appropriate growth pattern that looks like this. Because our worry, if we stay status quo, our worry is that our growth pattern will start to level off. And all of the things that we built for you guys, for our membership, for our owners, for our communities, may be at jeopardy. So let's talk about that a little bit. So the title of the slide is Growing Federal, Leveling the Playing Field. And what does that mean? But before I get into that, Innovation is Canada's 19th largest credit union. We're about the third largest here in Saskatchewan. And we do that through about 24 locations. We have about 400 staff serving you guys. We're about $3 billion in assets both on and off balance sheet. We have 4 insurance agencies. We also have a couple of mobile advice centers. So what we've done there is put everything you typically find in an advice center. We call our branches advice centers, and we put them on wheels. So it gives us an indication of us going out to communities that are less served, or going to things like auctions and other events. And this gives you an idea of where we operate. We operate here on the west side of the province. As you can see, we have locations from the US border all the way up to Buffalo Narrows. We're 10 years old this year. Of course, we're an organization of a number of credit unions coming together, but this is who we are. And we're 10 years old as Innovation Credit Union, and we're very excited to share that anniversary with you guys as well. Our vision and mission, I want to spend a little bit of time on this in the next slide. And the reason I want to spend some time on our vision and mission, because these long-term goals that we created just weren't built by just a few of us. They actually were inspired by feedback from our membership. And so it's very important to us, if we have our longer term goals built by our members, that we live up to these goals. And so when I talk about this and these cooperative principles, these are the founding factors and some of the reasons why we're successful. Of course, our organization is successful because of you guys, because of the business and the support you guys have provided us over the years. But we're also very successful because we've substantially aligned to all of the cooperative principles, not just a few. And I want to talk to you a little bit about that in the slides going forward. So let's talk a little bit about disruptors. So this presentation really talks about some of the disrupting factors in the financial services industry, some of the things that are impacting your credit union. And this decision to become federally regulated, again, just didn't happen in 2016. We've been working on this for a number of years. In fact, the research and the effort started back in 2012. And we've been looking at these disruptors throughout those years. There's really 3 categories. The first one is competition. The second one is the rapid change in consumer behavior, and also the demographics that are a part of the region that we traditionally operate in. And then the third major disruptor is technology. And those brought together has created an environment where our organization has to really understand that disruption. And what I love about innovation is that we believe that we should embrace that in disruption so we can truly understand what it means to ensure your organization is viable long term. So let's talk about them. The first one is competition. So competition to us, and when you talk to others, typically people think about, well, those traditional competitors, those guys and gals in the big five. FCC is another great competitor. And that's true. Our traditional competition is truly the traditional competitors, the big banks. Farm Credit is another one. And we've been competing with those organizations for a long, long time. But if you look at our current environment, not only do we have those traditional competitors, but we also have these very, very large companies. So back in 2012, I put this slide up. I put it up in front of our membership at our annual meeting, and I said, how long do you think it would be until these mega companies decide they want to do what we do? They want to do what credit unions do, and they're going to start to compete. So back in 2012, I would say part of the audience agreed, and the other part thought, yeah, that could be the case. And then by design, the next slide was the actual press release. The press releases of those companies deciding they want to do what we do. So to us, that's disruptive, because those companies are bigger than countries. And if they want to get into industry, they will, and they plan to get into the financial services industry. So not only are they very large, and if they want to get into industry, they will, but the other thing is that people love these companies. And again, so our traditional competitors, now we have these mega companies coming in, and these companies resonate very well with the consumers of today and also of tomorrow. The third wave is the fintechs. So fintechs is just a fancy word of a technology company that wants to get into financial services. So that's where the fintech comes from. In Canada alone, there's over 1,400 startups just in payments. So if you look at what credit unions do primarily, we do a couple things really well. One is we help you pay for things, and that's through cash, check, cards, those sort of things. And that's, in Canada, we have over 1,400 new companies that want to do the payment side of what we do. And then we do other things like intermediation, where we take in deposits and then we lend them out. And that still generates over 70% of our current revenue and profits. So traditional competitors, these large mega companies, we have these fintechs and payments, and across the globe there's over 12,000 fintechs wanting to get into the other part of what we do, and that is creating options for consumers to borrow from them or save with them or pay for things with them. So as you can see, competition over time has generated an environment that's truly disruptive. So in each one of these categories, I want to spend a little bit of time of what that means to your credit union. And so if you're to look at innovation, this gives you an idea of our financial margin. And remember, we still generate over 70% of our return comes from intermediation or financial margin. As an example, if a member comes in with some deposits, let's say we give them 2% for their deposit, so they can earn 2% on their money. Back in 2007 and earlier, we would take that 2% and then we turn around and lend it out at, let's say, 6%. And then we generate close to a 4% margin. And that margin would allow us to pay for people and lights and power and invest in things like banking systems and that sort of stuff. That wasn't too long ago where we had a 4% margin. Today, due to competition, our margin is in the 250s. Meaning when that member comes in, we still give them 2%, but then we turn around and lend it out at about 4.56%. So as you can see, competition has been a really good thing for consumers. It's allowed us to be a better organization, it's allowed us to offer better rates, and it's been a great thing for our membership. And we're okay with that. At Innovation, we're okay with that because we've still found a way to ensure that we have appropriate returns. Again, we're not profit driven, but we have to ensure that our organization continues to be very sound and stable as an organization. One more tidbit. If we had a 4% margin today, we'd have an extra $32 million in profits to do things with, like give back to our members or give back to our communities. That's how disruptive competition has been to innovation. So it's truly disruptive. So let's talk about the next category, and it's rapid change in consumer behavior and demographics. I'm not going to spend a lot of time on the rapid change in consumer behavior, only to say it's not just our kids that are changing their ways. It's also all of us. So we're seeing a rapid shift in how people decide that they want to do banking, how they want to do things like borrow and save and pay for things. So we're seeing a rapid shift, and it's important to us as an organization to understand what that means. As an example, we drew radiuses around all of our locations. And we also plotted where our other members are dealing. So as you can see, it's no longer the case due to change in consumer behavior that you have to have your membership right in your traditional area. You can see that we have lots of members outside of our traditional space, to the point where our third largest location is actually all of these members outside of our traditional region. So there's been a rapid shift in the way our members have decided they want to go about banking. And we have to understand what that means. And we've been building the various channels throughout the years to ensure that we're relevant not only for our membership for today, but also our membership for the future. And what I love about innovation is that we want to be a full service credit union. We want to make sure we're building all of the channels that you guys want to choose. Again, this isn't an effort or a presentation to say you need to shift the way you bank. We just want to build the channel so you decide how you bank. If you want to come in and do all of your financial services, all of your items right here in one of our advice centers, that's perfect. If you want to do all of your banking on your phone or computer, that's ideal as well. Or you might want to use all of the different channels, whether it's our call center or our advice centers or our mobile app. It's up to you. But we're seeing a rapid shift. And it's important to us because the reality is that the banking system has been built on the coattails of the boomers. And as those boomers move into the retirement years, we have to make sure we're relevant for the next generation, relevant for your kids and your kids' kids, because they're going to also want to borrow and save and pay for things. And we want to be a part of that decision when they choose their financial institution. We want it to be Innovation Credit Union. So that rapid shift has been something that we've been monitoring. And this is again an example of a glance into your organization. If you were to look at just over a fairly short period of time, in-branch transactions relative to digital interactions we're having with our membership, you can see there's been a massive shift. So it's not just outside of our organization where we're seeing change in consumer behavior, we're seeing it right here with Innovation's membership. So that's that rapid change that we've been understanding and transforming to over the years. And then the other one I want to talk to you about is demographics. So this was confirmed by the recent 2016 census. When you look at the region that we operate in, as you can see, a lot of our communities and regions are either flat with respect to population growth or even declining. And we have a few northern communities that are experiencing larger growth, but again on a relative basis. So if you took together all of our regions, we basically have a flat or declining population situation to deal with in our region. And we have to understand what that means as an organization. Is it important to stay status quo and focus on a region that's declining or flat in population? We want to still make sure that we're focused on it, but we want the flexibility to gain access to other parts of Canada. Because the reality is over 97% of Canadians live outside the provincial walls. So, but I do want to mention one thing. We're not looking to take over Canada. All we're looking for is a sliver of business beyond our provincial walls. And we think that's an important consideration for the future of your organization. So when you look at population growth and you also talk about things like average age, it's another thing that we have to understand. At Innovation, the average age of our membership is 48.8. So that seems like a reasonable number, but the reality is that back earlier, it was mid-40s. So we're seeing a scenario where even in a time when we're bringing on younger members, we're seeing our average age of our membership still increase, still get older. And that's something that we have to understand, because our average age is about 10 years greater than the average age of the province. So our region is a bit older than the rest of the province, and we have to make sure that we understand what that means as an organization. And again, a truly disruptive force. So let's talk a little bit more about what that means for your credit union. So this is a graph of all of the consumer deposits in your credit union. As you can see, it's skewed to the right, and that makes sense when you think about it, because again, these people in these age categories have saved for longer, so they should have a lot more savings than the younger folks. However, our worry is that it's skewed to the right more than we're comfortable with. As an example, over 80% of our consumer deposits are in the hands of people 55 or older. Right? Over 47% of the consumer deposits are in the hands of people 75 or older. That to us is a little bit more risky than we want it to be. And we want to start to deal with that now so that we can be in a better spot in the future. And the reason it's important to us is because remember, over 70% of what we do is take deposits and lend it out. So we want to make sure we have a well-diversified funding base, a well-diversified deposit base. So what we want to do by having the flexibility to grow beyond our region is create an environment that looks more like this. We want to retain and cherish and honor all of those members who have made us successful, and that's the blue. But what we want to do is achieve the orange, right? We want to create an environment where we can go after and find ways to get a more diversified, a more stable funding base. And that'll be very important for our organization now and into the future. So again, it takes us from an environment like this to a better environment that looks like this. That's key. A key reason why we're looking to have that flexibility to grow beyond our provincial walls. And then the third disruptor is technology. So technology is a number of different things. The reality is it's a catalyst, right? If you look at this report by Deloitte, you can see the impact technology has had over time. Here's where we are. Again, it's exponentially impacting a lot of industries and especially our industry. So as a result, especially your credit union. So technology is a catalyst. It's a friend to us because we love technology. We believe it's important for us to embrace technology so we can build things for the future, build new channels to bank. It allows us to become more efficient. But it also is a bit of an enemy. And I always tell this story, and I'm going to share it again with you on this video, and that is when we were coming together with East End Credit Union, we were having a community conversation, and we were doing it in one of their older buildings. So it was an older building, it was a dance hall, it had wooden floors, it was worn. When I went into the utility room to get an extension cord, we found this brand new thing coming into this older facility. So it stood out. So we figured it out. What it was fiber optics. So fiber optics was coming into this older building because there was a school attached on one end and a regional library attached on the other. And SaskTel's mandate is to get high-speed internet into the communities and schools of Saskatchewan. Our first response was, well, this is ideal. High-speed internet is in East End. Our banking system will run better, we'll be able to video with our staff, our lineup should be quicker, we'll be able to video with our membership. So that was the positive. But then it quickly turned into a bit of a negative in that now high-speed internet is in East End. So instantly and overnight, the competition is now in East End. Because before they had a pretty good environment, right? They had kind of a geographic situation where they're the only financial institution in town. But now they get to compete day in and day out. The competition doesn't have to come in and build a location, doesn't have to hire people, but they get to start to win business away from us instantly and overnight. So that's the enemy or the foe part of technology. But again, at Innovation, we embrace those sort of things. So the reality is, technology has kind of created an unlevel playing field. So day in and day out, we get to compete as everyone gets to come into our market. Currently, we don't have the business powers to be able to proactively grow beyond our provincial walls. And that's where that unlevel playing field comes into play. And technology isn't going away. If you look at it, over $14 billion has been invested into those fintechs we talked about earlier, just over the last 12 months. So it's getting more and more apparent in our space. And I have to talk about this invention in this section as well. Again, we're 10 years old, so is the smartphone, the iPhone. But it's a ubiquitous, transformational, and addictive tool that's truly transformed a lot of industries. And ours is no different. So for us, we don't mind this scenario. We believe it's a very important tool. We want to embrace it because the reality is that over 80% of us will have one of these by 2020. We have to make sure we're relevant. Again, we're not here to convince you you need to be using the iPhone to do all your banking, but we want to make sure that we're relevant on the smartphone because we believe it's going to be one of those primary channels in the future. And if this is one of those primary channels of the future, then why would we restrict ourselves to one part of the province, one part of the country? Again, another reason for us to find the flexibility to move beyond our provincial walls. So those are the three disruptors, and brought together create unprecedented disruption in our industry and in your credit union. So what we could do is kind of just say, well, hopefully that goes away. But that's not how we respond at innovation. We want to look at those and we want to embrace those disruptors, because if we embrace them, then we get to know them better and we can move our organization forward. Having the flexibility to grow beyond our provincial walls gives us better ability to deal with that disruption. And let's talk about that. So we pick a scenario where we have a credit union headquartered right here in our region, focused on our region, but with the flexibility to incrementally grow beyond our walls. That's really the essence of what we're looking to do. So there's three very important groups I want to talk to you about, and then we can open it up to some conversation and discussion. The first group you're a part of, and you're also part of the second group. The first group is you as a member. So you're probably sitting back going, well, what's in it for me? What's the benefit of me as a member? And so this is where it's difficult to explain effectively. And the reason I say that is that becoming a federal credit union, if we're provided the ability to become federally regulated by our membership and subsequently other stakeholders, it positions ourselves to the future. It's not going to necessarily have a rapid shift today or tomorrow, right? And when you think about this whole scenario, we're doing this in a position of stability, and that's a very important time to do it. You don't want to be looking at these opportunities in a position where you're not sound and stable, and we're very financially strong and stable as an organization. So that's a key time, it's a key consideration. And I already talked about a lot of these things. The reality is that in a growing credit union, you have better ability to build things for the future. In one that's static or status quo, you have limited ability to be able to build things for the future, to adapt to all of this disruption. So those are some of the things we talked about. And remember those cooperative principles. There's some key elements in our member rewards program that are by design attached to and built from those cooperative principles. So our member rewards program has three pillars. It has save, it has earn, and it also has give. And I want to talk to them a little bit, because this is fundamental. We've worked really hard to ensure that we continue these cooperative principles, we continue this rewards program, and we want to make sure that they're vibrant and enhanced in the future. So the save part of it is our no-fee account. So what we decided to do a few years back is, rather than taking service charges from you, we allowed you guys to just keep them, right? And so that's where the free account comes in. In fact, not only that, we also allow free e-transfers. And you can see the amazing result of launching a free account and free e-transfers has done for our membership. So to us, that's real-time value. So rather than waiting annually for an announcement on dividends or patronage, we want to provide value to you more frequently. And that's that save part. Our biggest campaign over the last few years has been moving over 26,000 of our members from paying fees to not paying fees. Very exciting time, very exciting part of this member rewards program. The middle part is our earn component. And so again, for everyday banking, you have the ability to earn rewards from us. And that comes through cash and dividends. And we used to pay it out annually, and now we pay it out every quarter. So over the last 10 years, over $21.5 million has gone back to you guys, back to our member owners, given the level of business you do with us. Again, a very exciting cooperative element that we want to make sure continues in our organization. And then the last part is the give. Again, credit unions do this remarkably well, but over the last 10 years, we've provided over $4.8 million back to our communities, back to the regions that we serve. And the other thing we did is we hard-coded in our policy that 2 to 4% of our pre-tax profit continues to go back. So in a growing organization, in a growing credit union, 2 to 4% of a larger number means more benefit for the community. So that save, earn, give is very exciting. It's something we want to continue. It's fundamentally hinged on who we are, the essence of being a cooperative and a credit union. So that's some of the things that we want to talk to you about, that we want to make sure it continues. But there's another very important conversation we have to have as far as impact to you, the member. So in the current environment, Saskatchewan credit unions have 100% guarantee on their deposits, and that's provided by the Credit Union Deposit Guarantee Corporation located in Regina. When a credit union becomes federally regulated, they have to move their deposit guarantee environment. So they'll go from 100% guarantee to the CDIC, or the Canada Deposit Insurance Corporation. They're the same corporation that guarantees deposits at the big banks and other financial institutions. However, you go from 100% guarantee on all your deposits to $100,000 protection on your deposits per category. And so what I mean by per category is that it's not just a blanket $100,000 over all of your savings. It's $100,000 protection per category. So let's say you had a single account that had some unregistered money in it. You would have $100,000 protection on your balances. So if you had $200,000 in it, only $100,000 would have the guarantee. So that would be your single unregistered. If you had a joint account with your spouse, that would also have another $100,000 protection. If you had some registered accounts, some RRSPs, that would have $100,000 protection. Your TFSA would have $100,000. So it's more than just $100,000 protection, it's $100,000 per category, and so they do stack depending on your situation. So we've had, again, over 28,000 conversations with our membership. We've provided this presentation to over 50 groups, talking about the benefits and the potential impact of things like a change in a guarantee. It's a very important consideration for when you guys are looking at this opportunity and the impact to the membership, and when you decide to put forward your vote. Again, we're here to encourage you to vote, and we're not here to encourage how to vote. So that's a part of all of those conversations, and it has to be a part of it because we want to provide all of the information for you guys to make an informed decision. So the other group that you're a part of, if you're a member of Innovation, you're also an owner, which means that as an owner, you should be sitting back and going, why is my credit union doing this? What are the reasons why? So we talked about them. First one is we want to live up to that vision and mission that we talked about, right? We want to be relevant anywhere, anytime, and that's an important consideration for us. Having that flexibility is an important consideration to live up to that vision and mission. We want to make sure that we continue to have the ability to line up with those cooperative principles that are near and dear to us and are key differentiators in this ultra competitive landscape. We're doing this in a position of strength, and we want to ensure that that financial strength continues. Our view is that there's a better likelihood of being financially strong long term if you have greater flexibility versus staying status quo. But we want to continue that nice logical growth pattern versus see scenarios where things start to taper off. So it's very, very important to us. And then the last one I talked about quite a bit, and that was that scenario where we want to make sure that we have a strong, well-diversified deposit base so that we can conduct business from. And that's crucial for our organization. Remember the slides, we want to have and retain all of the blue. We want to thank you for all of the business and retain that blue, but we want to augment that portfolio with that orange that I talked about. We want a more diversified, we want access to more members and younger members to continue to grow and evolve as an organization. But there's a few other things that you want to consider as an owner. So if we get the vote, if we get a positive vote, and we need to have greater than 75% of those members who come out to vote need to vote yes for us to go to the next phase. Even voting yes doesn't mean that we're instantly going to become federally regulated. We have a lot of work to do ahead of us. We have to get 4 more signatures. We have to get the signature of our current regulator. We have to get the approval and signature from the provincial government. We have to get approval and consideration from the federal government. And then the last signature we'll also be looking for is the signature of our new regulator. Because when a credit union becomes federally regulated, they have to move from the current regulatory environment to the new one. And that's the Office of the Superintendent of Financial Institutions, or OSFI for short. They're the same guys and gals that regulate the banks and other financial institutions. So the regulator will change, and that's an important thing for you to understand as owners of this organization. So let's talk about the last group, and then let's open it up to dialogue. So the last group I want to talk about is the staff group. And it's a very important consideration because the staff at Innovation is our #1 asset. Without great staff, we wouldn't be able to do what we do for you guys. We wouldn't be able to offer that great service. So our view and our conversations that we've had with our staff really hover around things like career advancement, job opportunity, development opportunity. Because in a growing organization, there's a lot more opportunity for jobs and career advancement and development. In a status quo, there's not as many. So the excitement has been building around, in a growing, vibrant organization, there's going to be more opportunities. But the other thing that we did, which I think is a game changer, was a few years ago, we invested into some technology, and it was a part of our omni banking strategy. So what we did, you remember this slide we talked about? Remember the slide that we talked about where we have a lot more digital interactions than we do in branch or in advice interactions? That's been shared with our membership at our annual meetings for the last 5 years. Our staff know about it. So when people look at that slide, they sometimes ask the question, and again, we've had this conversation or presentation over 50 times. And some of the questions that I get is, well, what's going to happen to our location? What's going to happen to our staff, especially those in smaller communities? So a few years ago, we invested in some technology that we now have the ability to access all of our locations. So when you think about it, this digital expansion that we are looking at, if we have the blessing to go federal, we want to expand digitally. And we will need great people to serve those members. So if you have locations that are experiencing less traffic, we now have the ability to hunt out all of our locations and find that capacity. So it's been a great thing for those staff members that may be having a slow morning or a slow afternoon. Now they can jump in and serve our current membership, but in a scenario where we're looking to grow our membership beyond our provincial walls, and we're primarily going to do that in a digital way, we need to have great people to serve those new members. And who best to do that? By our current staff group. They're amazingly trained, they're great people, and now we can use them through the technology we have to serve those members. So when you think about that situation, it's quite exciting. Essentially what we're going to do is being able to expand digitally, but yet create more opportunity right here in our region. And whether that's making it the day more productive, maybe making an environment where there's more advancement for our staff or new jobs happening right here in our region. So a very exciting opportunity from the staff group, and it's resonating very well with our membership as well. So another very important group that I wanted to speak to. So for us, our organization has been at this for a long, long time. It wasn't a decision that was made in 2016. It was a build of research and analysis that started way back in 2012. The decision made it in 2016. And again, through that process and the discussion with our organization, our staff, our members, and our board, we want to make sure that we're indicating that this is a decision for the future. Okay, this is a decision to ensure your credit union is here for the long term. And it's really an effort to retrench, to refocus on our current membership, but yet have the ability to build our organization beyond. So I want to stop there and open up the conversation before we move to the other parts of the agenda. Thank you very much.
Nice. 50 times, you're getting good at it.